Okay. Hey, everybody. How are you? And thank you. Bella Young. I never heard from Bella. So many new people. Agent 99. Heat. Hey, Heat. How are you, brother? Michael, another Michael Nash. How are you? So many new people here. Just give it a couple of seconds here. Give some time for some more people to join here. No rush. We have a little bit of a time here. TB, Pierre, how are you? Tim Junker, Wayne, how are you? David, okay. Robin, how are you, everybody? Robin's in the waiting room. Okay, gotta get, okay. Just gonna give another, sorry, we had just a little technical difficulty here. Get everybody on. Antonio, how are you? Wayne, how are you, Wayne? All right. I think I should start or wait for more people.
You could probably start.
Well, admit,
to some of these people. To Mary.
Bilal, how are you? Okay. Marin, how are you? Marin? Okay. All right. So welcome everybody. Stephen Kalajian, and thank you for entrusting me each and every day to teach you my 41 years of knowledge in trading the markets. It gives me a lot of great joy to be here. There's no greater joy in my life than to be able at this stage of my life to really want to transform the knowledge I have and to help each and every one of you. You know, I give my phone number out to people because of the fact I want everyone to understand how much I really care. And I really want each and every one of you to do extremely well. I decided to do this because I saw so much nonsense in the world that we live in. And I really wanted to, really wanted to enhance people's performance in trading. You know, trading can be very difficult, okay? Especially if you are your own worst enemy. What I'm here tonight to do is to explain many parts of the trading that I teach during the day. A lot of times in fast markets, it's very hard, but I try to explain the patterns before they happen. The style of trading I like is scalp trading and pattern trading throughout the days. Uh, Everything I do, which I'll get to, is based upon my combination methodology. But before we even get there, there's an expectation here that I want you all to be aware of. This is not some guy just, we're going to get a Lamborghini in 2 days and all the nonsense and BS that you see on the internet. I've worked with some of the biggest hedge fund managers in the world. I have an impeccable reputation. I've traded nearly 2 billion shares in my life. Impeccable track record. For me, I love trading. I love challenging myself each and every day, identifying the patterns. Am I right 100% of the time? No. Okay. But I like to be in the higher end of the range, 80, 90%. That's what I like to do each and every day. Um, I don't like to take a loss, but you have to sometimes, and then you just repivot. But the one thing I want to say here and now that this process is not something, because everybody learns differently. This process is not something that you're going to learn in one day. I make it as elementary as possible. I try to bring down your expectations because I don't know if you're doing this part-time, full-time, or if you're a student, if you have a full-time job, if you're trading the Tokyo session or European session, regardless of the fact. But the key thing for me here is that I want to enhance your learning, and understand that with the software that I spent nearly 10 years of my life building, that this software will empower you to become a great trader based upon the patterns that I see based upon pure mathematics, using my indicators to be able to identify these patterns to give you the best results each and every day. So again, the process is not something that everybody's going to be the same. Some people learn faster than others. Some people could take 3 months. Some people can take 3 weeks. Some people can take a week. I have people who learn my system in probably under a month, but then they falter, believe it or not, on using the execution platform, which is called the Matrix. Okay, I'm a moron when it comes to this iPhone. I'm a moron. And I don't say that jokingly, I say that sincerely. When I have a problem, I call my daughter and I say, Allie, can you help daddy? She goes, is your phone down? I go, yeah. And she comes right over. But I'm a wizard on that matrix. Okay. And I never really executed my own orders in my life, except for when Ernie or Michael or whoever was with me went out to the bathroom, went to go grab lunch, and I saw a great pattern. I go, boom, like that. And I would just put the orders in. But everybody here is made up of a different DNA, and everybody here, okay, learns differently. Some of you trade index futures. Some of you trade commodity futures. Some of you trade both. Some of you trade equities and index or commodity futures. I could just go on for the next 5 minutes on every possible combination you can think of. I have people who trade prop money. I have people who trade their own money, then they trade prop. I have people who trade their own prop trading firm like a Legends or an Apex or a Top Step, and they have 10 accounts or 3 accounts or 5 accounts, right? Either way, it doesn't make a difference. These patterns repeat themselves. And, for me, I want to be able to, whether you're teaching, learning stocks, whether you're learning about ETFs or Bitcoin or options, which I think options are great if you're going to trade on the bigger time frames. But for me, it's all about, taking a step back, being great at one thing, not good at many. Index futures by far for me are the greatest asset. Then I like to trade stocks / ETFs. Okay. But for me, again, it's really up to what you like to trade. Again, trading stocks, you need $25,000 in your account to do the PDT rule, right? Which you'll get 4 times leverage. So if you have 50,000 in your account, you'll have 200,000 in intraday trading. You have 25,000. Well, you cannot dip below that, or else then you're frozen on that. Futures, 60-40 rule, meaning the first 60,000 is taxed at long term. The next 40 is short term. And these are the symbols I look at every single day. All right. And I'll start over here. NVIDIA, Avago, Meta, Palantir, AMD, Amazon, Microsoft, Apple. Spiders, diamonds, Qs, Russell, ETFs. Coinbase, MSTR, SMCI, Tesla, HIMS, and IBIT. Bitcoin, NASDAQ futures, S&P futures, gold, and oil. Those are the symbols I look at. So pick 1, pick 2, pick 3, pick something. It doesn't make a difference to me. Okay? You hear me putting orders in. Okay? You hear me telling you what the strategies are. So the way I look at this, again, is to really want your expectations to be curtailed in the sense, because it's the amount of time that you put into this, that the amount of time that you want to learn from me and understand the methodology, the sequences of how the next pattern, what to expect next. I'm very blessed to say this, but I'm more happy at this stage of my life that each and every one of you that are with me is significantly successful in this. Some people have demons, They don't like using stop orders. They think they're bigger than the market. Lack of discipline. When they hit their goal today, a member of my community, he made his goal early in the morning. There were phenomenal patterns today in Apple, in the Spiders, the Qs, in Coinbase, in Avago, OKLO. And you know what he did? He said, I ain't trading. I hit my goal. I ain't giving it back. And even though the patterns, every one of those patterns that he probably would have taken would have been winners, he was disciplined enough. As tough as it was, he surpassed his goal, but he was able to restrain from trading because he watched, learned, and listened and visualized and saw why these patterns worked out. Kudos to him. Kudos to him. Okay? Now, like I said, some of you are from other parts of the world. There's a language barrier here, a language understanding. Gentleman joined today from France. You think he, no disrespect, but you think he understands my terminology right out of the gate? No. But I say the same things over and over again. I'm not a mind reader and I'm not a psychologist. But guess what? I answer every question I could possibly see on that Discord. My right eye's looking at the charts, my left eye's looking at that Discord, reading any questions that come my way. No questions ever stupid. No question is stupid. I tell people all the time, you must be proactive. My father said to me one time in my life, Stephen, why do you always ask why? So I guess I want to learn. It was a great answer. Okay. So for me, I think the most important thing here is the expectations of learning from me. I really try to teach this at an elementary scale. Now, people can say, Steve, you're out of your freaking mind. You're out there. You're completely crazy. You know, your brain, we can't, you go 400 miles an hour, Mach 10. You have ADD times 4,000. You know what? But I dummy it down. I do the best I can. Okay. And I always go back to the analogy and what happened to me in my life when I was in my 20s or late 20s, and I wanted to buy a motorcycle. And my friend said, get a Kawasaki, get a Suzuki, get a Honda. I said, what are you, crazy? I'm getting a Harley, right? I bought a custom Softail, Mandarin Orange, all chromed out, cost me $25,000, $25,000. That was so loud it set car alarms off, right? And so I went for the best, right? So I feel that with my knowledge, my experience, my wisdom, training, my experience in trading, nearly 2 billion shares. I can't even tell you how many futures contracts I've traded in my life, how much dollar amount I traded in the forex market, that I'm here to help you. Okay. Again, you could be in my community, learn my patterns, learn my methodology, trade the euro dollar, the pound dollar, the DAX, the Euro Stocks 50 futures in the European session. Okay, the Tokyo session, I do some teachings at night here. Great pattern. Look at this. Beautiful pattern. Beautiful at 1830, okay, which was about 6:30. Beautiful short pattern on the S&Ps at 30 and a half, 31. Kabooshed, right? Beautiful bear flag. Beautiful pattern on the 30-minute time frame, reversing to sell with the correlating with the 15 and the 60-minute time frame. You short the first bounce on the 15. There it is, kabooshed, right into the 10 bar, 32, 16, 17 right now on the S&Ps. So these patterns that I teach you, okay, again, are all based upon using 3 time frames, a 15-minute, a 30-minute, and a 60-minute time frame. The conditions are all based upon my indicator 4, which is my proprietary algorithm, which is on each time frame. So right now we're in a negative trend on the S&Ps on the 15, 30, and hourly time frame during the Tokyo session. So, and again, using the 3 time frames, the 5 conditions, which are a trend, which is what we have now, a negative trend on the NASDAQ and S&P futures. We have a buy reversal, a sell reversal, a correlation, and a disconnect. So today, when Netflix reversed to buy on the 60-minute time frame, you went into a buy trend. But the 60-minute time frame also, another way of saying it, is a 60-minute time frame correlated with its 30 and 15-minute time frame, and I'll show it to you. Avago reversed to buy at 10 o'clock on indicator 4 on the 30-minute, putting the 30 and the 15 in what's called a buy disconnect, and then the 60-minute reverse to buy, and it correlated with the 30 and the 15, creating now a trend, a buy trend, and the pullback in Avago down to 249.55 ran $4, $4.50. So off the pullback on the 15-minute time frame. So again, it doesn't make a difference. Today, great short. Apple, this is one of my most powerful strategies. The 60-minute is negative on indicator 4. The 15 is negative on indicator 4. The 30-minute time frame reversed to sell. You short the first bounce on the 5, the second bounce on the 15. Apple dropped more than $2. So that's one of my strongest strategies, by the way. So again, 3 time frames, 15, 30, and hourly, that make up the condition off of my algorithm, which is indicator 4. Then, of the 5 conditions, a trend, a buy reversal, sell reversal, correlation, and disconnect, you have each condition has a buy and a sell divergence. All my strategies are all based upon divergence strategies. So now we have that. That goes on the shelf. The next things, which I'm gonna show you tonight, okay, is my chart overlay. All right. Now, with my chart overlay, which you can get on Ninja, well, not real, well, Ninja, I mean, because it doesn't give equity data, I should have start with that. TradeStation and TradingView, and yes, if you're just going to trade futures, it works with futures, but it's very difficult to get the equity data on Ninja. It can be done. It's like pulling teeth, but it could be done. Okay, but my favorite is TradeStation, of course, and then TradingView. Okay. Who can you see messaging recording on? What?
No.
Oh, all right. So now the way I look at my chart overlay, and these are the next 5 most important rules to expect to learn, right? 1, you need to learn my indicators 1, 2, 3, 4, which we're going to go over tonight. 2, we're going to the numbers to the right. 3, my terminology, which you're going to constantly hear the same things over and over again, right? All day long. 4, you're going to have to learn my strategies based upon the buy and sell divergences. And then 5 is 2 parts. 5 is basically 1, you have to learn how to scale into a position and how to scale out of a position. Now, with that, there's an A and then a B under that, okay? Which means that if you're in a trade, you have to ask yourself, if you're shorting, based upon this pattern, is it going to make a new low or a higher low? If you're buying, is the next push up going to make a new high or a lower high? So again, very, very powerful. Today, when OKLO pulled in on the 5-minute time frame and it pushed up and the 15 got oversold, it made a new high. Why? ADXs were big, big, big buying pressure. You can watch it on the Bull, the Bear, and the Ugly tonight, or I can show you here tonight. The pullback, beautiful pullback on the 15 minutes time frame, deeply oversold. MACDs were positive on the 30 and the 60-minute time frame, yellow over blue. ADX was rising, buying pressure of greater than 25, ran over $4.50. Okay, so with that, okay, the part C of 5, again, remember, 5 is learning how to scale in and out. Okay. Also, you need to learn about if it's going to make a new low or a higher low based upon as you're putting, the scaling in, scaling out based upon the trade. Now, if you're scalping, that's completely different, but on a pattern I'm talking about. And then C, one of the most important things you need to understand is how to use that matrix. If you're executing on a matrix where you're putting the orders in, you could look at Google, go to Google, you can type in TradeStation Matrix, or you can go to TT, Trading Technology. They'll show you what a matrix looks like on their system. I used to use that, by the way. Okay. But again, the buys are on the left, the price is in the middle, and the sells are on the right. So if I'm looking to buy S&Ps here, and Michael's out, and I'll just go 16.5, 15.5, 13.5. Go click, click, click. 5, 10, 20, like that, or whatever, how I have it set up. Okay. So, and then if I got filled, order filled, now I'm long 15. Now I'm up 2 or 3 points. I go sell, right? I'm offering at 18, and I'll offer maybe, and I'll raise, no, I don't really raise my stops because I'm too fast, but I'll go sell 10 at 18 and sell 5 at 19 or 19.5 or whatever the pattern is. Okay. But again, so those are the most important parts now in learning my indicators 1, 2, 3, 4, the numbers to the right. My terminology, well, that's you're going to get through the learning in the dynamic learning in my live stream. Learning dynamically is how I feel based upon the people who have been with me and the success stories I've seen. Dynamic learning and watching, learning, listening, and seeing is what you're not gonna, in my personal opinion, you're not gonna learn this in a book. You're not gonna learn this in Investopedia. You're gonna learn this in a way by watching dynamically in real time. Okay, in real time. All right. Before I get into the charts, does anybody have any questions? Because I'm going to get into this for the next 10 or 15 minutes, take some questions, and then we'll call it a wrap because I know it's late. Does anybody have any quick questions before I get into the chart overlay really quick? Nope. Where are the questions? Right here?
Yeah.
Anybody questions? Yep, I'll talk about defining stops. Stops are very important, Antonio. So basically, if you have a range, okay, if you're scalping, you still have a range. If, for example, I said let's short at 1830, let's short S&P futures. I like to short 31.5 to 35.5 or 36.5. My stop is always 2 over. Okay. So if I'm giving a range 31.5, maybe I'll start selling 32s, 33.5s, 35s, 36.5s, and my stop would be 38.5. Okay. Now, there's a lot of times I don't get filled, okay, on the entire move up. And I like to do what's called pyramiding. I'll give you an example. 1, 2, 4, 8. If you're doing micros, or if you do the big ones, maybe I'll go 5, 10, 20, 40, right? Or 20, 40, 80, depending on the pattern, right? Or 3. And what you like to do is you like to bring your average price up. Yes, adding more contracts in the open market is very risky and more risky, right? But I like pyramiding. I don't do what's called single lot entries, like, saying, okay, I'm going to sell S&Ps here at 17. Right. So let's say, Timmy, let's say you get filled. If I call a range 31 to 36, I'm 31, 32.5, 34. Trades 34.5. I say, okay, no more shorting. I would look to cover them now anywhere between 28, 27, and 32. So let's say your average price is 33.5, right? Now it's dropping 32, 31.5. Maybe you cover one. Yeah. So you stop. Now you take your stop at 38 and you lower it right down to 33.5. Okay. Now it's trading, 31, 31.5, 31.75, 31, 30, 30.5, 30. Maybe you cover one. Now you should I would lower your stop down to 32.5. Let's say you sold, I don't know, 7 micros, or maybe you cover 2 at 30. Now you're still lowering your stop to 32.5. That stop at 38 is come down twice. Somebody said to me yesterday, when they put an order in, they have TradeStation put the stop in. No. Well, you can do whatever you want. I can't tell you what to do. No. That's not what I teach. I'm teaching based upon the pattern, and the stop is the stop based upon the pattern, not because TradeStation Matrix is telling me to stop. Okay? All right? So now let's say it's trading 30, 30.5, 30, 30.5, 30.5, 31, 30.5, 30, 29.5, 29. You cover some more if you like, or you just lower your stop right down to 31. I don't know where this thing is going to go. This thing, look at this 830 bar, 1840 bar, 1835 bar. S&Ps were trading 31.5, 31.75. Kaboosh, 1, 2, 3, 4, 5 bars. It dropped, Jesus, it dropped 15 points. You could have just kept on lowering your stop, right? So let's say you sold maybe, I don't know, if you started shorting it based upon the pattern, 30.5, you sold 31.5s, maybe you sold 2 and you sold, 3 more at 30, up another point. Now you short 5, immediately, boom, right, got down to 26.5, 27. You can cover 2. Even if you lower your stop to 30, you never would have gotten stopped out at 1845 tonight. And then kaboosh on the next bar, right down to like 19.5, 20. You're like, holy macro. Maybe you cover some or you lower your stop to 25, because who knows, this thing could go south. Right? So I want you to all understand that this is not science. It's a form of art. Okay? That there's no, if you start thinking scientifically, you're going to get all messed up here. Okay? You see how I react? Boom, lower your stop. Boom, boom, boom. Okay, boom, boom, boom. Keep 5 in my pocket. Keep 10 in my pocket. Keep 20 in my pocket. It's going in my favor. Boom, just cover them like that. Right? Okay? All right. So, if without any more, I hope I answered your question, Tim. Okay? Because, again, it really is, it's an art. So if I'm calling it short in Palantir, like today, I said, look to short, a scalp short, 37.38. Your stop would have been 38.5. But as I got up to 38.30, I said, I would just keep adding up here. I know the strategy. It traded up to 139. So let's say you start shorting 37.30, 37.70, and maybe went to 137.30 or 137.25. Maybe you went to 17.65, and maybe you went to 18. All right, and I said I would stay with it. It went higher because I knew that pattern. It went to 139 and then dropped $2.50, $3 like nothing. Okay, now technically you would have been stopped out at 18.5. Okay, you would have lost on that trade, but then you could have reshorted it. As I said, I would have reshorted it. Okay, if I said you want to keep adding to it, or you want to start a new position up here, as some people did, okay, and then it dropped down to like a minute, like, I don't know, 7 minutes later, down to 137.5. So you got to give it some room at times. And maybe Palantir is not a dollar range anymore. Maybe it's $1.50 range with a 50-cent stop. Like a Vago, you can't really trade a Vago anymore for a dollar range. Can't. Even though we called it great short, when today on the 15-minute time frames got overbought into the negative MACDs, a Vago was trading 254. I blinked, it was trading 254.5, and I turned around, it was trading 252. Okay, so again, everybody's different. And I got to start maybe reevaluating certain stocks. Okay, and see what the ranges should be. But again, if your mindset is how many shares you want to trade into that position. If you want to do 300, 500, whatever, then you have to think, you know, how you want to scale into that position. Okay. All right. Now, let me just go over to the charts here really quick. All right. First of all, the dotted orange lines right here is what's called a 10-bar weighted moving average. And this gives me the reference point, for example, when to look for buys and or sells, it gives me the ability, the reference point, to see the distance from the price to the moving average. And it also gives me a reference point based upon using my indicator 3, indicator 1, indicator 4 as a place where potentially I may want to look for a range to get long and or short. So here at 16:30, 4:30 this afternoon, when the S&Ps were trading 34 and 3/4, I saw this pattern. My skin almost fell off my bones. The 15-minute time frame was getting way overbought into the negative MACDs on the 30 and the 60. The 30-minute reversed to sell, correlating with the 15 and the 60-minute time frame. So basically, I saw this pattern right into the 10-bar weighted moving average. Now, I don't want someone to say, oh, well, Steve says every time it goes near the 10-bar moving average, we got to buy and sell it. I didn't say that. I didn't say that. I didn't say that. Okay? But, so basically, I use this as a reference point. Okay? I use this as a reference point. And then I want to see the distance from the price to the 10-bar moving average. Today, when the S&P traded down to like 0506, we were like almost $29, $30 away from the 10-bar weighted moving average. And I said, okay, if you want to take a scalp long and look for a bounce, if you're trading scalp, you can go micros, or if you're trading the big ones, you probably have to go every 2 handles wide, if that makes sense to you. Okay. All right. So this is a reference point. I want to see how you can see the bear flag here. You see the right into the 10-bar. A lot of times, based upon indicator 3 and the 10-bar, it really does service. Like today at 250 on the S&P futures, when they had that monster bear flag, you can see here how the price went right into the 10-bar. Look at that, 35 and a half. I mean, an absolute Picasso. First bounce on the 5-minute. The 5 got significantly overbought after the 30-minute time frame reversed to sell, correlating with its 15-minute time frame. Okay? All right. So, put the 30 back up here. The solid white line is what's called my pivot line, and my pivot line is very important because it gives me the ability to see where the MACD is, which is indicator 1. Indicator 1 is very powerful. I use it to get all my buy and sell divergences. So, for example, today, when the S&P futures were, look at this monster bear flag, when the S&P futures were getting overbought into this negative MACD, okay, yes, granted, 58 and a half, right? And they got absolutely cabooshed over 50 points in a matter of about an hour and 15-minute time period. This is a monster sell divergence. Now, basically, I would say that when the MACDs are blue over yellow, it's negative above the pivot. If you hear me say it's yellow over blue, it's positive above the pivot. Okay, a MACD can only do 2 things. A MACD can only be negative above the pivot or positive from above the pivot, yellow over blue, or a MACD below the pivot line could be negative blue over yellow below the pivot, or a MACD could be positive blue, yellow over blue below the pivot, like the way Netflix was right here. And let me just show you Netflix really quickly here on the 60-minute time frame. Oh, I can't even type anymore. I got to be able to type. NFLX. If you look at Netflix on the 30-minute, this is a MACD positive from below the pivot. This is a MACD negative above the pivot. Okay, so the big difference here. Okay, and if you look here, you can see how the 15-minute time frame crossed positive from below the pivot. Very, very strong pattern on that. Okay, so it just gives me a reference guide because there are certain strategies that I look for that give me that ability to see the market in that way. All right? Okay. Now, let's go over the indicators. Indicator 1 is a MACD, 12.26.9. I just basically use it. You cannot use them, any of these indicators by themselves. Everything I do is based upon the combination methodology. And again, I'll say this, 85% of the time, I'll use indicators 1, 3, and 4, and 15% of the time, I'll use indicators 1, 2, 3, 4. Okay. All right. If you take your pad and paper out and you write vertically 1, 2, 3, 4, basically the way I look at the market is very simple. Indicator 4 is my number 1. Put a 4 next to number 1. Put a 1 next to number 2. Put a 3 next to number 3. And then put a 2 next to number 4. So if I walk out of the room and I come out, and guess what? That's exactly how I look at the market. I look at the indicator 4 as my primary, number 1, okay? And it's just really it really does have an impact in the way I look at the market overall, okay? In the way I look at the market overall. All right, Michael, can you sing Carol? Oh, she's asking for the link here, okay? All right, now, indicator 2 has two indicators in it. One, you have what's called buying and selling pressure. Okay, and if you bring up OKLO here, you can see the big buying pressure. Look at this big buying pressure. You can see 44.6, 6.26. The number is always in the red. I'll get to that. The ADX is rising. You have two indicators in it. The ADX is rising here, and you have monster buying pressure on the 15, the 30, and the 60-minute time frame. So a lot of times, what I'll do is I'll look at this. And you'll able to see the ability to see the market based upon indicator 2 to give me the ability to see the buying and selling pressure, and also when the ADX is rising. So the ADX rising means the trend is in place up or down, and there are phenomenal strategies like here when the 15s got oversold on OKLO, which I called here, and I called this one here during the live session. 15 oversold, 15 again. Look at the rising ADXs, MACDs positive, big buying pressures on the 30 and on the 60-minute time frame. You only have one way to go but up. Look at a MACD positive, rising ADX, you have a plus 40 buying pressure. So I use this a lot of times to help me identify the strength of the market on that particular pattern or time frame. And that is basically off of indicator 2, which I use 15% of the time. Indicator 3, I only look at the cayenne color here. This does print dynamically, so I look for oversold and overbought patterns within the algorithm, within the patterns overall. Now, I want everybody to be clear, price leads and indicators lag, okay? Price leads, indicators lag, but the indicators paint a picture for me to be able to identify the pattern, okay? All right. Again, this is the number here. It is dynamic, but it does print what's called end of bar. And so there's a lot of times you'll see like something like this happen dynamically, but next thing you know, it rallied and you'll see it close something like that. I'm like, that thing wasn't down there at 2:30 in the afternoon. You know what I'm saying? So that's that. Okay. Now, this number here basically is the ability to see the last sale. This is my algorithm, and I only look at the cayenne number, and that gives me the ability to see when that time frame reverses to buy and or sell on that particular time frame. Okay, so it tells me on the 15:30 here, you can see on OKLO it reverses 65.37 on the 15, but 62.55 on the, and it's right here as well, just to show you. Okay. The dotted yellow dots here, right here, these yellow dots represent the price within the algorithm. And then I'm going to go over really quickly the numbers to the right. My right eye never moves off the number. My right eye never moves off the current bar. This number here represents the price right here to where the 10 bar, the distance from the price to the 10 bar moving average. This number represents the price right here. Okay, the price to where the algorithm reverses to sell on that particular time frame. Okay, so here you can see the numbers on the 60-minute are going to be a lot different than the numbers on the 15. Here you can see the price to the 10 bar moving average is 8, but the algorithm will reverse to sell more than 5.7 points lower, 5.7 below here. Okay. All right. I do not look at this number here. It just tells me that the MACD is negative above the pivot. This number here I look at basically tells me that there's buying pressure. Anything greater than 10 is pretty enormous. Okay, here you have a plus 40, greater than 10, it's 40. The oscillator here is just the overbought number. I like to see things get into the single digits and or in the 90, 95 readings. So when a lot of times when I'm looking at divergences, buy in or sell, I'm looking to see how these overbought, oversold oscillators are working into the divergence pattern. So for example, today, when you got the oversold condition on OKLO right here at 1245, 1230, I knew that you were oversold, very oversold, into this positive MACDs on the 15, 30, and hourly. The ADXs were rising on both 3 time frames, 15, 30, and hourly. Big buying pressure on all 3 time frames. You had to be an idiot not to buy that. Okay? All right? All right. Indicator 4, right here, I only look at the Cayenne number, and that is the number that just tells me when I get my buy and sell reversals. Okay? Okay. So with that being said, I just want each and every one of you to know those are my indicators, the numbers to the right. Now, what's important is to learn my terminology. Okay, some great patterns here in the overnight session here. I would have sold these 24s. Jesus, I'm gonna make money here. And then learn my terminologies, learn the strategies. Like today, for example, when the spiders reverse to sell on the 30-minute time frame, you short the first bounce on the 5, that dropped 10, and then the second bounce on the 15 right into the 10 bar moving average. Phenomenal pattern, an absolute Picasso on the, I'm sorry, on the first bounce was the 3-minute. I apologize. That dropped 10. Second bounce was right into the 10 bar at 60, 35 and a half. And that was a monster drop all the way down to the 16, 15 range. All right. So the fourth part is to learn, obviously, the strategies, right? And then the fifth part, I will just tell you emphatically, you really need to learn how to scale in and scale out of a trade. So for example, on this double red short right now, where the 5 correlated with the 15, 30 and hourly, I'm sitting here and I'm like, I'd be selling S&Ps here at 24, 24 and a half. And so I would have went 24 and a half, maybe 26s, right? Or maybe 25 and 3/4, whatever. So let's say I sold a 10 lot there and it just dropped 4 points, just $2,000. Even if you did one stupid contract on that double red short just now, meaning that the 5-minute time frame right now just correlated right here. I'll show you on the S&P futures really quickly here. You can see that the 5-minute time frame reversed to sell right here, correlated with the 15, 30 and hourly. Look at the S&Ps, 24 and 3/4, just dropped 5 points on that. So even if you caught 3 points on one S&P future, basically you made $150. Okay. Again, I just want to say thank you for letting me be here tonight. It's 45, almost 50 minutes. Since I look 5 handles on the S&P. NASDAQ futures just dropped about 20. But I wanted to say this again. I'm so glad that you all have joined me here tonight. Again, it's really about putting the time in. Like I put the time in. I want you to put the time in. I want no false expectations. I want you to learn from me. I give out my cell phone number to each and every one of you, 914-500-7484. You guys can text me. Don't write me a thesis. I will not read it. I have ADD times 4,000, so I won't read it. I'll just call you, okay? If you have a question, ask me in the member Discord. If you say, Steve, can you please call me? I'll always call you. Sometime throughout the night or whenever, I'll get to you. But the thing is that's really important is that here at SK Trading, I want you to understand that the process is slow, steady, and to be consistent each and every day. And that's all that matters to me. No question is stupid. Learn from me. Learn what I've done now almost 42 years come this August 2nd. And I will, August 2nd. And I will just tell you, August 1st, I'm sorry, August 1st. I just want you all to remember that I'm here for you. Our team is here for you. And I just want each and every one of you to be able to be consistent and to be successful. Do you advise, first of all, I can't advise, okay? Do you advise starting with one strategy type before trading all the patterns? No, no, I don't think you should sit around all day long and say, I got to wait for a double red or a double blue when the 5-minute time frame reverses the buy and the 30, 15, 30, and 60. No, I don't remember. I don't think that. I think you learn the patterns, you learn the divergences throughout the day. You just can't sit here and say, because let's say a pattern like that double red just now doesn't happen. We're going to sit around all day. There's other patterns. There's sell divergences off the 15. There's sell divergences off the 30-minute time frame, right? So I hope I answered your question on that. Okay. I hope I answered your question on that. Okay. All right. Again, anybody who came in late, anybody who has a problem in any way, this is recorded and will be sent to you. Again, I want to say thank you so much for being here tonight and all the beginners. Thank you for empowering me to teach you to be here and entrust me with your whatever you're going through. Let me help you. Let me be the one to be able to put you on the right track. With that being said, have a great, great night, everybody. Again, I'll be looking forward to seeing you here tomorrow. God bless you, and God bless United States of America. Be well.